Should presidents have the power to control interest rates, to lower them when they think it's best? So the Fed is supposed to be independent. It's not supposed to serve at the whim or the pleasure of the president. And that's an important distinction between our central bank and other countries. You can't force people like me and other investors to buy bonds to push long-term yields down. You can't force the Fed to raise or lower interest rates. Other countries like Turkey have tried it and they failed miserably at it. The only time I've seen in my 36-year career when the Federal Reserve has had control over long-term rates, mortgage rates, was after the Great Recession. The Fed entered into quantitative easing. The Fed typically does not get involved in long-term rates, but it was such a unique circumstance with the Great Recession. The Fed decides if inflation's running hot, the Fed will raise rates. If inflation is cooling, the Fed could cut rates. So if we do have a slowing economy, you'll see long-term rates go lower. If the economy doesn't slow down or if inflation doesn't come in a little bit more, you'll see interest rates stay where they are now or probably go a little bit higher. But that has nothing to do with the president. The president doesn't have power over long-term rates. They could influence long-term rates by having better fiscal policy.